Removing unrealized gains from crypto and Bitcoin. Yes, you 100% heard me correctly. I know there's been a lot of controversy in the United States regarding removing unrealized gains in general, but it would be absolutely massive for crypto and Bitcoin. Well, apparently, Senator Lummis has urged the U.S. Treasury to remove gains on, unrealized gains on Bitcoin and crypto. I got my personal CPA, Scott, here. If you guys want to hire him to do any type of crypto stuff, make sure to check him out at scottjmartin.com. But anyways, he's going to explain to us what happened, what Senator Lummis said, and what maybe could happen in the future if the U.S. gets rid of unrealized gains on crypto and Bitcoin. Take it away, Scott.
Senators Cynthia Lummis and Bernie Moreno have drafted a letter to the Secretary of the Treasury regarding the 2022 law entitled the Corporate Alternative Minimum Tax, or CAMT. Here's what you need to know. Note that the application of the 2022 law directly affects only corporations and not even all of those, as they have to satisfy certain thresholds to apply. There are two organizations at work here, the IRS and the Financial Accounting Standards Board, otherwise known as FASB. Now, things get a bit detailed here, but this is how it works. The IRS is tasked with governing what is taxable and collecting those taxes for the United States government. Easy. They've been around for a long time, and we know how they work. Their approach to calculating crypto gains and losses is based on the concept of property, so gains and losses are handled like the purchase and sale of anything like a car or refrigerator, almost. The FASB, on the other hand, is tasked with the governance of what a corporate financial statement must contain in order to get investors the absolute accurate information for them to make decisions. These are rules for how income and expenses are reported, assets are valued. You get the idea. They came out with a requirement in 2023 that crypto assets are valued at fair market value, which was great for the crypto market and the corporations involved. This means that the financial statements may report unrealized gains and losses for crypto assets. As you know, an unrealized gain or loss involves a token that you have not traded or disposed of yet. When you put the CAMT and the new FASB governance together, you get potential taxes on unrealized gains. Remember, this is just for corporations. The Lummis Moreno document addresses this issue. How's this going to affect you? It's not going to affect you directly, but the FASB standard on crypto assets is the first by an accounting organization and further establishes legitimacy and stature to the crypto world, which is a big accomplishment. In the US, there's been very little governance over the accounting and taxation of digital assets, and so any movement on the part of government or regulating bodies requires scrutiny by the members of the world of crypto. These are precedent-setting events, and the Lummis Moreno document outlines a movement in a potentially harmful direction, especially if it de-incentivizes corporations from investing in crypto assets. We'll keep you posted.